Let's move on and get to our next market guest. We've got Bala of Cash the Chaos joining in. Jay, always great to have you with us on the show as usual. So it's been really up and away. Today is a day of slight consolidation because banks aren't playing ball quite as much as IT is. But just, let's start with the levels and the gravity-defying moves. I mean, we're talking 24,000 plus on the index. What next are you tracking?
Hi, Surabhi. Good to be here. The next level for the Nifty is at about 24,336. And the markets have come pretty close to it. And about 24,336, I don't think it's going to get right now, but that's about 24,600. As long as the Nifty stays about 24,350 on a closing basis, 23,350 on a closing basis, the trajectory remains up. But it's very obvious to everyone that the markets are quite stretched. But watch out, if the Nifty were to drop below 23,350, it will start showing signs of correction. Probably there is one concluding sequence of higher high to come through in this leg. And at this point, the vulnerabilities for the Indian markets possibly can come from the realty and the capital goods sector. And from a global point of view, the USD JPY cross is trading really, really dangerously. And my objective has been since 2022 about 164. If it were to exceed 164.5, 165 on a closing basis, we'll have a real crisis, currency crisis on hand. That will have impact on all equity markets. So the current global macro, most important factors, watch out for the USD JPY cross.
All right. Hi, Jay. Good afternoon. Good to see you, Ben. Since you're speaking about currencies, for our audience out here, we track the Indian rupee as well as the dollar index. So what are the levels you're looking at on both those two?
Yeah, Indian rupee has been untradeable, and it's better to avoid it completely unless you have, a hedging for your business purposes. It's a complete avoid. It's like behaving like a peg currency, so avoidable there. When it comes to the dollar index, again, the contribution is definitely going to come from the USD JPY cross. 106.5 is a very important level. The fact that dollar index is already trading about 105.75, which was my previous important level, it's already indicative that there is some strength possible, given that European elections are around the corner, and further forward we have the US elections also forward. So that is palpable strength in the short term for the dollar index, but watch out for 106.5. That's the most important level.
Okay, all right, got that. Jay, what about individual stocks? Give us some stock ideas. Normally you give us two, I think. So let's go through those two.
Yeah, I have two, one from the large cap and one from the mid cap, small cap space. The large cap is from the pharma sector. I still believe the pharma sector has got higher highs to come through. So I picked Dr. Reddy's for today's setup. I have a stop loss at about 5,900 and a short to medium term price objective of about 7,025. I think it's got an incomplete structure, and hence the structure will complete around 7,025. And in the small cap space, mid cap space, it's EPL, formerly known as EPL Limited is trading at about 200 odds, and it's got a breakout. It's been underperformer since 2021. I think it's starting to catch up with the rest of the market. Today's breakout has got potential to go back to all-time highs, but we'll have a conservative estimate of about 280, 290 with a stop loss of about 180. SL Pro Pack.
All right, got that. Jay, stay on. We have more questions for you, but we also need to slip into another quick break. We'll come right back and then focus on some more stock ideas and also some...
Pretty a fair bit of pre-positioning which happens. One before the announcement, one after the announcement, one, of course, by the time the date of implementation comes through, I mean, it's all mostly done. That's well advertised now, but we'll see if this comes through or not. 1730 is where HDFC Bank is now trading at. Jay, just one point on the Nifty. For you, the make or break level is at, was it, you said 23 something, 23,350 or so?
That's right, Prashant.
That's a far way off, isn't it?
Yeah, blame the volatility that we have seen post elections. The markets, when it starts to come down, the moves have been quite pronounced, and that's pushed support levels not to tangible close by levels. You need to be keeping quite a bit of buffer so that you don't get trapped on the long side. If you recall, even after the elections didn't go out as expected, I wanted to make sure that the market's close below the support level. So you need to be extremely cautious. Turning when the market turns from a bullish phase to the bearish phase, you need to give enough sufficient room so that you don't get caught on the wrong side.
Okay, Jay, what about on IT? There's been a lot of momentum on IT on the way up over the last 1 month. Is there any stock which still looks attractive?
If you recall, last time, Rima, I had picked out Black Box, and we've seen the stock go up to one circuit and then about 12% yesterday. So that still remains a top pick for me within that space, formerly Avaya Global. And this has potential to scale somewhere about 500, 525. And there's a slight change of stance for me when it comes to Nifty IT sector. Now, it's opened up the possibility of fresh all-time highs. But if it were to, Nifty IT were to clock 39,826, slightly less than that, and then come down, that'll be very bearish for the medium term. So the positive is that it's slightly opened up all-time highs possibilities because the index is trading past 36,500, which was my critical support, so the critical resistance. But it's a very choppy overlapping move. So it is raising the potential from the possibility that April 2023 low was marking the final leg of an ascent that will result in an all-time high, but could result in a medium-term top. So I'm very watchful about what's happening in the IT sector.
Okay, all right. Jay, we'll leave it there. Thank you very much for your time. Great speaking with you.